Hello everybody, welcome to another Nomad Hedge market update video. We're basically going to recap this week, where the markets could be headed next week. Let's start off by taking a look at the major indices here, beginning with the SPX or the S&P 500. This is the composite here. By taking a look at the technicals here, we can see that the markets are in a corrective phase. And we saw a big drawdown here on Friday, and the S&P was down 1.22%. So this was pretty much expected here. I have been bearish, and the recent move here completed wave B, so we're seeing another impulse here towards wave 3 of minor degree. So we're looking at about 42.73 here on the S&P 500. This is our initial target here, and then we should see another corrective move, and then we should complete wave 5 at some point. So September is typically a down month for the major indices, but more importantly, the second half of September tends to be even worse than the first half. So we're seeing this seasonality playing out accordingly. So we can also have a look at the NDX or the Nasdaq 100 equivalent to the QQQs, and it's pretty much the same here. We do have this long-term trend line here going back to January of 2023. We tested it again here in March, and then again here in August, as well as another here on August 25th. So a complete breakdown below this high-low trend line here would confirm also the downward trend. So we're ultimately looking at 14,748 for wave 3, and then we should find support here at around 100% projection. So typically you see wave C here being of equal length of wave A. So this is a typical zigzag action right here. You know, a break below this high-low trend line here would confirm downward bias and the move towards the downside here. Now typically wave 4 ends at around 0.382, and so that also aligns with the 100% extension here. And then that should complete wave 4 before moving into wave 5. And after September, October typically tends to be a good month heading into the end of the year, when you see a lot of portfolio managers trying to catch up to their performance. And so that would be, you know, hedge funds and large institutional investors. So they have to pouring money into this market. And on top of that, you also have a lot of stock buybacks going on. So let's also take a look at the Dow Jones Industrial Average. And it's also following the same pattern here. We're seeing an impulse down here towards wave A, completing wave B, and then we should see we have seen the completion here of wave 2, and then we should see another, you know, impulse towards wave 3. So we're looking at 100% projection ultimately at 33,450, and we'll just have to see how the market's going to perform once we reach these levels. So this is a trend line here that's we can move on to a monthly chart. This is basically the mean between the two, and so we could find buyers even above the 100% projection. So this is, you can see here that we have support here a couple times previously, so we could ultimately find buyers here above that 100% projection. So let's also move on here and take a look at the market breadth, and we can see here that stocks are pretty much below that 50 threshold here. We can see that stocks, we're looking at stocks inside the S&P 500. So this would be the 20-day moving average. We can see here that 44.5% are trading above it, and then you have the 50-day, we're down to 32.6%, and the 200-day, we're looking at 50% of the stocks in the S&P 500 currently trading above the 200-day. So pretty much following in line with the corrective phase here. We're also going to have a look at the US dollar index, or the DXY. We can see this massive move up here. We've had multiple weeks after weeks, and that's typically what you see here when you see a completion wave C. But I still have the option here that we could nearing the end of wave E as well. So I still have that in mind, but I wouldn't be surprised to see some corrective moves here pretty soon. But even if the dollar would, you know, correct at some point, it would still be perceived the dollar to be in a new bullish phase. So even if we're seeing the DXY taking a breather, the market indices could still go down. All right. So with the yields also rising, the dollar is following suit here. So we're looking at this potential resistance level here at 105.88. And if you also take a look at the US dollar versus the euro, we can see here that it's also found some potential resistance here at 0.9379. So I wouldn't be surprised if we saw some sellers stepping in within this area. But again, if you go back to the DXY again, we can see here that we still have some room towards the upside before hitting 105.83. So this is an area of interest. And if you move on here, take a look at the yields. This is the 10-year Treasury Yields. Now I've marked this as wave 5. This could potentially be a minor degree ABC, or we could end up heading much higher here and completing wave 5, along the levels here at 4.5%. So I'm still open for that to happen. If we take a look at dollar, as I showed you here on the DXY, we still have some room towards the upside, so that's why I think the yields could still move up higher here. The VIX, pretty interesting here. As you can see here, this would be a logical area for the VIX to catch a bid and a large move here towards the upside on Friday. So if the VIX is going to spike, this would also be a logical area for it to do so. And we've also closed the last open gaps towards the downside, and you can see here that we do have open gaps here on our intraday chart left open. So we could potentially see the VIX start to spike from current levels. A break above this lower high trend line here would confirm it. So be watchful here to see the VIX spiking. That would obviously have effects across the major indices and the cryptos as well. Let's also take a look at the crypto markets here and start off with BTC. So I'm, my bias is still towards the downside here. This move looks corrective, and we should have completed wave 5 here. So we're looking at an impulse move here towards wave A, and we are currently seeing some distribution here within this lower high trend line, moving down here towards its last leg of wave 5. So that would be 100% projection, and we're looking at around 23,500. Worst case scenario, around 22,400. Invalidation, obviously, if we're breaking above this area here, which would be, let's draw a horizontal line again, and that would be 28,167. And so if we move on here to some of the indicators here, we do have a solid buy signal here on the MACD on the daily chart. But if you take a look at the weekly, for instance, we're just trending sideways here. This is not a trend whatsoever. Even the RSI is pointing to neutral levels here. This is a trendless market here. So it's just been choppy action towards this downside, and this is typically in line with this seasonality also for BTC. September is the worst month for Bitcoin as well. This is basically it. We are looking for more downside here for BTC, and the same could be said for Ethereum here. We're looking at another leg down here towards 1,440. Now, if we zoom out a little bit, you can see this trend line here. This is a trend line to go back to 2016. It acted as support again in March 2020. This was the COVID lows, and now we're breaking below it. We're trying to eagerly defend it here. We can see here on a weekly candle, which buyers are really trying to defend this trend line here. So we'll see if we can catch up here and stay above it. But if not, suspect more downside here for Ethereum. And you never know. Sometimes trend lines can sort of like predict where the market could be going. So I'm looking at this area here, and the same could be said for BTC as well. But I've signaled some warnings about this previously. So if we're seeing a corrective move here, then we could look at a potential, if you measure this on a Fibonacci projection, we're looking at around $388 for Ethereum. Now that's pretty much long term. We're looking at in maybe a year from now. So clearly, the trend is still towards the downside. We can see here that sellers are starting to show up here right at this level. So maybe this was just a retest of this higher low trend line, and then we'll just have to see how far this thing is going to move towards the downside. So it's pretty much the same story here with Bitcoin and Ethereum. Now, if you take a look at the total market cap, this includes Bitcoin and Ethereum as well. So this has followed pretty much in line with our wave count here. We completed wave A. We saw a corrective move here towards wave B, and now we're seeing an impulse here towards wave 3 here. So we're looking at a total crypto market cap here at around $800 billion by November. Okay, so that's going to be in the middle of November. Currently trading at 1.04 trillion. A break towards the 1 trillion mark could trigger some psychological factors, and sellers could step up here. So be a little bit cautious here. If you're not holding up these levels, you could potentially see the crypto markets move much lower. So if we zoom out here, I'm looking at this area here. Okay, so this is around $700 billion. Okay, so this area here has acted as support multiple times. So I'm looking for the crypto markets to bottom around this area here. If we're not bottoming here, sorry to say, but you know, the next level of support would mean that we could see this thing, you know, getting chopped in half, and we could see the crypto markets falling even further to around $400 billion. You know, be mindful here that we have to defend certain levels here for the crypto markets to stay intact. So I'm obviously keeping an eye on this, and you can follow me on Twitter or X, and I'm posting daily charts on crypto stocks and the market indices in general. So we have FOMC here on Wednesday. Now we've seen the European Central Bank surprising the markets with another 0.25 percentage move towards the upside. And so, you know, market participants are worried that the Federal Reserve is going to follow suit and raise by 0.25. Now my take is that perhaps they will, but I think they might pause now in September and go ahead with the rate hike instead in November, because if the ECB just raise rates, that would catch a bid for the euro, and we've seen how much the dollar have strengthened, right, in a couple of weeks. So, and that's what the Fed wants. The Fed wants a stronger dollar because it, you know, it eases financial conditions. They're trying to fight inflation. So on top of that, you also have a couple of European central banks next week. So I think the Fed might, you know, go ahead and pause this month and let the Europeans do their thing and raise rates, and then in November, that's when they're going to raise by another 0.25. So expect the markets to see the Fed pausing here, but it's more important what they're saying in this meeting. And so I still believe that the markets will sell off based on the technicals here. So that was pretty much it for this video. If you made it this far, thank you so much. You can subscribe, like the video, and I'll see you guys in the next one. You can follow me on X. My handle is Nomad Hedge. I'm also on Threads with the same handle across the board, and I'll see you guys in the next one. Take care for now.